They say when tech giants dance, the ground really shakes. But what happens when two titans, Intel and Nvidia, maybe decide not just to dance, but to, work together? Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, using data from September 25, 2025, we're doing a deep dive into Astera Labs, that's ticker ALAB. It's been an AI favorite, but just hit a major speed bump. We're using our research to figure out what's going on.
And this isn't happening in isolation. You, our listener, are probably feeling it. The market's nervous. NASDAQ futures are pointing lower. Plus, the whole semiconductor space feels jittery, right? There's renewed talk about chip restrictions with China, those huge tailwinds. They're facing some pretty stiff headwinds now. It's a precarious backdrop for Astera-specific drama.
Okay, right. So let's unpack the main story here. Astera Labs is a superstar because its chips are vital for AI data centers. They make these components, specifically retimers and redrivers. You need them for signal integrity when you're linking thousands of GPUs. Basically, they stop data jams.
Exactly. That function is why the stock just took off. But yesterday, down almost 10%. The fear that Intel and Nvidia might just team up and build that capability themselves, in-house.
Which is like the definition of a nightmare competitive threat, isn't it?
Absolutely.
Yeah.
The giants potentially squeezing out the smaller star by targeting its exact niche.
And this threat lands at possibly the worst time given Astera's valuation. It's just breathtaking. We really need to pause here because the difference in views is, it's shocking. You look at Wall Street analysts, overwhelmingly positive, like 87.5% rated a buy or strong buy. They're clearly focused on future growth.
But then you look at the fundamentals. You run the numbers based on projected cash flow, company assets. Our fair value calculation. It comes out at just $17.28.
Okay.
Let that sink in. That's the canyon gap. The stock closed yesterday at $205.27. $205.
Yeah.
It's like paying private jet prices for a nice car. It's an almost unbelievable disconnect, fundamentally speaking.
It really is. And that makes them incredibly vulnerable to bad news, competitive news, which is exactly what we just saw play out.
Right. When a stock's flying high, mostly on enthusiasm, the technical ground underneath can be pretty shaky.
So, is the crowd still enthusiastic? Let's look at sentiment. It seems like a real tug of war right now. You've got bears' active short interest is up there at 7.53%. That's not insignificant.
True, but look at the options market. The put-to-call ratio is only 0.63.
Okay. So for every put, every bet against the stock, there are more calls betting for it.
Yeah, roughly 10 puts for every 16 calls being bought. It means that dip buying mentality, and maybe from retail traders, it hasn't completely broken yet. There's still some confidence there.
But can that confidence fight the technical reality? Given ALAB's run-up, what's the volume surge telling us? Is this selling pressure real?
Oh, it's real. The conviction looks absolute. When you look at the chart, the short-term trend didn't just bend. It snapped, violently reversed. And that huge price drop, it happened on massive selling volume. That screams institutional distribution to us.
So the big money. Funds, institutions.
Yeah, it seems like they're aggressively selling positions, liquidating. Momentum has just vanished. And maybe the most critical point, the speed of this decline. It's accelerating, not slowing down. That's worrying.
Okay, so you've got this stratospheric valuation, a huge new competitive risk, and now a technical breakdown confirmed by volume. Putting it all together, what's the strategic outlook here, it feels like?
Well, the weight of the evidence points pretty strongly towards a bearish outlook, doesn't it?
I think that's fair, yes. The focus now really shifts to key support levels. Where could it fall? The bears. They're likely eyeing that recent low, around $195. If that level breaks that psychological line,
Then what?
then the path could open up pretty quickly down towards major support. We see that around $157.50.
Wow, okay. And for the bulls, what needs to happen to turn this around?
To invalidate this whole bearish picture, the stock really needs to reclaim ground. It needs to close back above $227. That's the line in the sand for now.
Got it. So for Astera Labs, it really does seem like the shadow from Intel and Nvidia is proving long and pretty cold right now. Even the brightest AI stars, it seems, aren't immune to gravity, especially the gravity of industry titans and, fundamental reality. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.